Happy Sunday, traders, and welcome back to another weekly video where we get ready for the week ahead. And we usually start with the dollar, so that is what we're going to do here today. And let me just reiterate my point with why I like to start with the US dollar. Whether you trade gold, currency crosses, indices, etc., all of these things are impacted in one way or another by the dollar. It is a really, really important indicator in itself to keep a close eye on the dollar index, and that's why you see it in my videos so frequently. So let's start by taking a little bit of a technical analysis approach and sort of diagnose where we're at with the US dollar. We're still in pretty clearly an overall upward trend. You can see that on the daily chart, we've had a series of overall rising price action. And this past week, we formed a nice low here right around this 105.6 area. Now, I want to point this out notably because, again, many people kind of had thought we were going to go take out these lows. And in fact, if you watched my videos, I mentioned that I thought the dollar had a pretty solid chance of actually holding these lows. Now, by no means was I perfect in spotting that bottom because, again, it did end up kind of testing underneath those lows. But price did rebound. Buyers were able to regain that area, and we drove higher for most of this past week, barring Friday's price action, which gave back a little bit of those gains when we did also get some news in the morning. Of course, this past week was a pretty active week, and in terms of the numbers that I was talking about, the core PCE number came out, and it didn't do too much to continue to push the dollar. However, what did offer some overall strength was this GDP number that came out last week, which showed the US GDP was stronger than what was expected, and of course, that is going to be a bullish thing for markets. Now, while we're on this page, let me show you guys what's coming this week. This week is a monster of a week, and I do want to remind you real quick, if you enjoy my Sunday videos, do me a quick favor, hit that thumbs up button. And also, if you're new, hit that subscribe button with the notification bell so you can get notified when I go live on YouTube. We're going to be streaming a lot of these events, and I don't want you to miss that. So this week, we've got an action-packed week, and the real big stuff starts coming in on, of course, Wednesday, where we've got the FOMC statement. We have ISM manufacturing PMI, and we also have the Bank of England doing some stuff as well as finally to close out the week with a banger. We've got NFP, so jobs numbers out of the US. All of that set to move the markets pretty substantially. Let's have a quick look before we get back to the technical charts at the Smart Money Tracker. This is, of course, our company's software tool. And what I want to point out with this is that, we have two sides to this section that I like to discuss. We have the net positioning, which shows that the US dollar continues to be a major bullish setup for institutional money. Same with oil and same with gold. And on the flip side, in terms of the more bearish assets, you have things like the Japanese yen, the Australian dollar, the Canadian dollar, Swiss franc, and the Dow still seems to not be a very attractive thing to big time money. Now, of course, we've got a lot to unpack here, and I also want to show you just the latest filing. So this is the latest data according to the software, which has automatically pulled this in for us. And so what we can see here is that keep your eye on the far right. This week was incredibly interesting. Now, this net change column shows us in terms of week to week moves what was most meaningful in the past week. The S&P 500 and gold both saw an incredible bid in terms of bullishness. So a bullish week. Same thing with bonds, by the way, which is an incredibly interesting variable as well. The 10-year notes getting a little bit of a traction there, and the Dow recovering a little bit. Now, on the flip side, we take a look at the most bearish movements in the recent money moves. Well, take a look at that NASDAQ. That's a little bit concerning, right? Big sell in the NASDAQ in terms of bearishness from hedge funds. Institutional money seems to be going the other way now. Same with NZD, JP225, and GBP. So feel free to pause the video if you'd like to take a closer look at the COT reports. And now let's get back to the price action. So in terms of the dollar index, I've made this point. I still think the dollar probably runs to try and test these previous highs. And again, going back to that concept we just discussed with the Smart Money Tracker, we can see that there was a nice little an overall bullishness for the dollar in terms of what institutional appetite is looking like. So big money seems to be interested still in the dollar. That supports my price action bias here to the upside. And again, I like having that. Anytime I can take a look at the COT reports to get a closer look, I will do so. So of course, let's take a look now at gold, which closed out the week, guys, very, very strong. And if you were watching my live streams this week. We will be, like I said, we'll be live streaming all week this upcoming week. Or if you were in our Telegram channel, I put out a post for members on the gold price, and we pointed out this area here. Now, let me actually pull this up just so you guys know I'm not making this up, and I'll show it to you. Okay, so here was our idea on our Telegram channel, which, by the way, will be linked down below in the description if you want these ideas sent to you. So this is exactly what we had marked up. I pointed out that gold was sitting at a support level around 1980, and 1980 hit it and shot through the highs. And I said, if momentum continues, it could be headed to the previous high, which I was talking about this red zone, but little did I know we would shoot right past that and right up into the 2000 marks, which opens up a whole nother side of things as we go into the week ahead. Again, reminder, join the Telegram. It's linked down below in the description. That's totally free to join, by the way. Okay, so what I mentioned is that price action would probably hold this area. And I thought we were just going to go back and retest these highs. Nope. We actually broke right through them, and now it does look like there could potentially be some retest buying that may be attractive to bulls. So this previous level of what was kind of our resistance point could actually start looking juicy to the buyers. So again, of course, with the weekend gap, you might get a gap up in price or down in price. We don't know. Much of that will likely be impacted by what happens over in Israel and Gaza. If there is escalation, gold is likely to drive higher, and any de-escalation or negotiations might calm the storm here when it comes to gold. In terms of price action, though, I like the idea of a breakout and pull back into this supportive zone. Any retest along this trend line, as well as this previous level of resistance, could be a nice buying opportunity. In my personal opinion, of course, I will wait for confirmation from the indications that I look for on the software. But again, this is a nice start, right? You have a nice bullish presence in terms of institutional money is in the bullish side of this trade, both in terms of net positioning as well as week-to-week change. So we like to see that. That's a nice positive factor. Let's take a quick look at the Euro USD. The Euro dollar here on a 4-hour chart perspective, you can see came back down to retest support. Support ended up holding for the bulls. And really, you know, this is a tough one. This is a tough chart for me. I think that there's just more interesting charts out there. You take a look at, you know, NASDAQ, you look at gold, you look at, there's just charts that are moving a lot cleaner right now than the euro. However, what gets my interest with the euro would be a breakout between the upper limits of this, you know, range, right? A breakout higher or a breakout lower. Of course, with the Fed meeting coming up, that may seem like these things are far away, but guys, Wednesday's Fed meeting is likely to cause some serious volatility. It is not expected that they'll raise rates. I don't think they will raise rates. However, their antics about where they feel they are in terms of their progress, their fight against inflation, will very much move the markets. Any lingo, any commentary, any posture from the chair will likely cause this to move dramatically either direction. That is yet to be seen. In terms of dollar yen, I've made this point very clear, and I want to follow up with my idea with this dollar yen at 150 level. It does seem like we, in fact, have yet again rejected this idea at 150. Now, let me reiterate very quickly. If you've heard about me saying this many times, then forgive me for repeating myself, but this 150 level has been on my watch list for dollar yen due to the fact that institutional money, the Bank of Japan has reiterated several times they don't like this level. So I'm talking about the Bank of Japan. They don't like the currency exchange rate at this high of a price point. The reason for that, think about it. It's 150 yen to get $1, right? That starts becoming very costly, and they don't like that exchange rate. So what do? Well, they've basically talked the market down sometimes when it gets up to these levels by basically laying out some general threat that they're going to buy their own bonds to strengthen the yen. And so if we see this level continue to reject, if we see a breakout, you know, sellers potentially be ready. I mean, this thing could very quickly drop if we do see it. But for me, I've said this many times, I'm pretty neutral on where I think dollar yen is going. I'm more so interested in watching for the break either direction. So in the case that we do see the yields heat up again, if we see inflation fears kind of go rampant again for the US, it is very likely that this 150 level gets broken and we see this area now as a support level. However, where we currently sit any signs of weakness from the Fed, any dovishness from the Fed could very well give you some breakouts, and trades could actually be smooth sailing for dollar yen sellers if, in fact, we get a breakout this week. So I'm interested both directions, but I'll keep a close eye on that one. If I had to lean, I would actually go to my top setups page and see, well, there's dollar yen. It gets a +7 on our algorithm's scoring system. Of course, our algorithm, the Edgefinder, is looking at all of these different metrics that you see across the top of your screen: the commitment of traders, retail sentiment, seasonal data, trends, economic data like GDP, PMIs, etc., inflation statistics, labor statistics, and interest rates. It's looking across the spectrum here, and it's generating a bias. So when I look at dollar yen, I'm going to probably not look for shorts, right? I'm only going to look for longs if price action agrees with me. This is where some people get mixed up. Fundamentals and sentiment are wonderful resources for traders to use to add commentary, to add confluence to their trading. But what's really going to tip the scale for me is to also wait for technical setups that make sense and that give me good risk to reward. Okay, so in terms of dollar yen, we'll continue to watch that one for a possible breakout higher. But again, it is on the watch list. It is getting a bullish reading from the Edgefinder scoring, and we'll watch that one closely as we go into the rest of this week. Pound USD, didn't have too much fun with this one this past week. I tried to catch some sells. Unfortunately, price action was just a bit too choppy for me, and I'm back to square one. In terms of setups for the dollar yen, a breakout below the lows could get me back interested, or a breakout through the highs. But for now, this one's just going to kind of stay on the sidelines. I don't really love the trades that I took on this one, to be completely honest with you. I think I would like to try and step away from this one and wait for it to really make a decisive move lower or higher, right? So a breakout here would be ideally where I'm looking to get in, and I will watch again for that Fed meeting to give me some confidence in where I think prices could go next. Now let's talk about it, guys. The NASDAQ. The NASDAQ has been a tough one for me. However, you know, I think that the NASDAQ is approaching a low. Now, I will say that, of course, with humility, because I've been wrong about my idea of a NASDAQ bounce sooner than this. I thought we would bounce here. We kind of did, but then we fell through and I got stopped out on that idea. So I am by no means saying that, you know, I've played the NASDAQ perfectly, and I've been pretty transparent about my losses that I've taken on this. However, in terms of where we're at, let's step back and take a big picture look at where the market is. We've pulled back a pretty substantial amount. These are companies that are still producing pretty dang good earnings. You know, Microsoft, Alphabet, right? Meta, producing overall what I would consider to be strong earnings numbers, and most of Wall Street would agree with that. You know, however, the question is, you know, the mortality of these things. Is there going to be recession? Is there going to be, you know, further decline? And in my opinion, I'll make my point very clear. I am starting to look at these and these prices, and I'm saying, you know, I think the markets move higher from here. I think that end of year rally is still a very reasonable belief. I think you're oversold on the, you know, the daily chart here. And if I can start catching a bounce, I will certainly look to do so. Now, I want to add something here in terms of seasonality. One thing I'm looking ahead at when I take a close look at the NASDAQ is, you know, consider the seasonality of this upcoming month. Guys, this is November. And in my game plan, I know that the Edgefinder scores seasonality for stocks and indices in a certain way, right? I know that during certain months, this is going to give us a bullish reading, or a more bullish reading going into next month. So earnings have been pretty good. Seasonality is on our side starting in November. Price is oversold. I'll be looking for price action breakouts to possibly look long. So I'm resetting. I'm waiting for the right opportunity, but I will look to get long, specifically NASDAQ, and possibly some of the smaller cap stuff as well. But that is a very, very pressing trade for me. Again, I think you are oversold. I think it's due for a bounce, and we'll watch to see how that one goes. The Dow took an absolute tumble on Friday, which was, of course, thanks to a couple names, Chevron specifically. Here's CVX, right? Chevron had a real tough day on Friday with earnings missing, I believe. Yep. So you had earnings on the miss, and that of course brought down the US 30. Many of you guys I know trade the US 30, and I just want to let you know that I really would encourage you to take a closer look at under the hood. What is the US 30? Well, it's a collection of stocks. You should probably keep an eye on those stocks if you're going to be trading the US 30. Understanding how earnings from those companies are performing can be really useful. Anyways, depending on how you draw this trend line, the Dow, either way, is in a really tough move here. Now, of course, from that previous high that we saw in July, we're looking at a 9.34% move. Not quite correction territory at that 10% threshold, but you also got to consider the Dow has been stuck in the same spot for a few years now. It really hasn't moved all that much, despite, chopping around back and forth. In terms of price action, though, this is decisively bearish, right? So the price action here still looking ugly, and my personal opinion is that of the three indices, this is the one I like the least, right? Now you might be again due for a bit of a bounce soon, along with the other companies. Indices, but I still think that you've got a lot of downward pressure on this market, and sell side could continue for the foreseeable future on the Dow. Remember, we also took a look at COT data, which did not help the case for that Dow, which is still sitting at a net positioning of 70.84% short, long to short in terms of what institutional money is up to with the Dow. So really concerning on the Dow side of things. And you flip it around again, you can see of the indices, if we just wanted to look indices for a moment, let's get SPX on there. We'll do US 30, and we could take a look at NAS. And you can see of the three, the NAS has been the favorite, which makes sense. Megatech has been kind of the place to hide this year. S&P 500 following, and of course the Dow, the most bearish in terms of institutional money. We could make a big old case about that. The quick answer for me is, hey, bonds are looking pretty attractive. Dividend stocks, big stable stuff. Why do that when I could buy bonds, right? That's a big competitor to the Dow. Anyways, the idea would be we need to see breakouts before bullishness for the Dow and for the NASDAQ and for the S&P for that matter. If I take a quick look at the S&P, real tough downward trend here. And, of the three I've mentioned, I still like the NASDAQ. I'm very interested in being long on those big, premium companies. Yes, they trade at high evaluations, but for me, it's like, I'd rather be in those companies that I know are cash rich. They're comfortable if we do enter into a tougher time. So for me as a trader, I think that is going to generate a lot of flow, a lot of interest if we do start to get a bounce. Anyways, S&P 500 very close to the Dow. A pullback, again, are we going to go lower? Well, you got to really strip this back and you got to ask yourself, we just broke the 200-day moving average. And again, I don't use this all the time, but the 200-day moving average is an incredibly useful indicator specifically for the stock market indices, because a lot of big time investors use this as a simple trigger, right? We bounced off the 200, but then we broke right through it, and now we're decisively underneath that 200-day moving average, which just looks rough. So again, I'm waiting for a signal that price is still able to find that bounce before I decide, oh yeah, it's just going to bounce up from here. I got to see the price action signal to confirm my idea on the indices. Quick look at oil here. Oil overall, I think, is supported around these areas. I don't think it goes too much lower from this. Though, again, of course, anything could happen with markets. If we do get continued recessionary fears, it's possible that the demand side could get hit a little bit on the oil side. But what kind of keeps me in the bullish camp either direction for now on oil is, in fact, the geopolitical escalations, the concerns there. That is, of course, going to be a threat to the other side of the coin, supply, right? With oil, I'm not talking about just price action. I'm talking about real world fundamentals. Demand and supply are impacts to oil's price. If there's wars and concerns, supply gets cut, which of course can increase demand, right? So think about it that way. If the economies around the world experience, heavy recession, which I am not in that personal, I don't believe that is going to happen, although anything could happen. I don't believe most likely that that's the case. I think that, of course, that is a bear case scenario for oil, but I am more on the bullish side of oil. So we'll keep an eye on that one, of course. And again, lots of setups this week, lots of things here on the technical and fundamental sides to watch here this week, guys. I do want to say, remember, you can join our Telegram channel for free down below in the description. And if you'd like more information about our software, the Edgefinder, if you made it to the end of this video, first of all, can you guys do me a quick favor and just let me know you made it to the end of this video by typing, let's do our word of the week here. If you made it, you made it 20 minutes in, I really appreciate you, first of all. Let's get the Fed in the chat. If you are somebody who made it to the end of the video, let's get the Fed going in the comment section. I'll know that you really made it to the end because usually I do these like in the middle of the videos. So if you're a regular and you made it this far, drop a the Fed in the chat in the comment section, and I'll know you made it to the very end. And I very much appreciate your viewership. I just want to say also, if you guys would like a copy of the Edgefinder and you don't already have one, get a discounted copy by using the link and promo code that's down below in the description. We'd love to get you set up with our software tools. Again, all of the stuff that I do in my videos, we work very, very hard to do the research for these videos, as well as to build the tools that help me to do that research. So if you want to get your hands on your own copy, again, click that link down below in the description and explore the options. We do have pricing options, and if you reach out to us, we do also have payment plans available, etc. So with that said, thank you guys very much for watching and have a wonderful week ahead.